All right. Good morning, everybody. A lot of economic events on the table today. ADP, jobless claims. So we're looking at 8:15, 8:30, 10 o'clock, 11 o'clock, 11:30. These additional auctions are very often a game changer when it comes to midday reversals. They are one of the key pieces that I use to identify if we even have the potential for a reversal on the day. So it's a very simple thing. You just look to see if we have any auctions and you start mapping out a game change in sentiment, right? If we've been sideways, look for it to begin expanding. If we've been expanding, look for it to reverse and go the other direction. We did finally get outside of this range we've been working on for a few days, but we're still inside of the greater range, right? So that 38.45. We've legged up on top of it. Now we got a Busby off of it. Still have resistance at the 38.75 area. $39.5 is the top of the greater range if you back up just a little bit more. So we want to kind of focus on 36.5 to 39.5. It's a good 300-point range. We've been bouncing around in there for a wee bit of time. Bring it out to the daily chart and kind of get a grasp of what we're dealing with here. Using this large candle from 613, that gives us a 38.75 down to call it 36.50. The range that we've been talking about for the last few minutes kind of ties in with these last 5 days, right? We're on day number 6. So we're looking for a resolution of this. It's very likely going to be tomorrow's numbers, not today. Don't get me wrong. Today is full. It's a full house. A lot of stuff on the books. But tomorrow's data is on the list as one of the most impactful data point pieces for the entire month. And so I don't want to say that today's going to be just another range day, but so far we're holding inside of the range from yesterday, right? We've certainly given this thing enough time to let the moving averages get caught up, right? We've talked about that before, distance from moving average. So if you look at the 10-week, not the 10-day, but the 10-week, we're at about 2.6% underneath the 10-week. Right? And we've been slowly letting that 10-week come in, and by not continuing to expand lower, we're getting it closed. The closer we are to the 10, the more room we have to run, the more room we have to expand. The 10-week does provide some insight, but I always like taking a look at the daily. So now we're looking at how far away from the 10-period daily moving average are we, and are we above it or below it? Well, we're above it. We crossed through it the other day. We're holding above it by, around 0.5%. On the year, we've managed to get over 3% away from the 10-period before we start to stall out, pause, consolidate, pull back, come the other direction, and get back towards the mean. So from where we're at right now, we're basically in the center of the basketball court. We have the capacity or the potential to move 3.5% to the upside and at least a 4% move to the downside before we would even consider being oversold. And we're talking about 3.5% away from the 10-period moving average, not just making a 3.5% move, right? So we have the capacity right now for a very large move in the market. It's one of the easiest ways to be able to gauge Are we, quote, overbought or oversold, or have we moved too far? Nope, we have not. So while we're out here on the daily, let's kind of think about what we're looking at here with all of these wicks. They talk about reading candles and looking for patterns, and a lot of times what we just need to clear off all the indicators, take a look at what was really going on here. Buyers stepped in, defended the level, and we're happy, very happy to take it back up again. But they didn't follow through with it, right? Been a little bit of a grind, but every time it's come back down to those lows, somebody has happily picked up the pace, bid it back up again. I don't know how happy they were about it, but they did it. The new Bloomberg futures products are on Thinkorswim finally. We still don't have the Smalls exchange, but we do have the new Bloomberg FairX futures. Pretty cool. I found them this morning. Been checking, about once a month. I've been checking to see if Thinkorswim was going to let the new futures products in. Dun, 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 dun. Yes, they have. So that's pretty cool. It's B5 and LB5, TEC and LTEC. So there you go. You have the contract names now. So from our current location, what's going on? Well, we can only do one of three things. We can hold the line, maintain our Globex range, and call it good. The market is slightly up for the day. We didn't crash and burn. It really doesn't need to do any more than this. And they would tout it all over Bloomberg and all over the news. And they would say it was a positive day in the market. We expanded more than 0.25%, and the S&P was up, and blah, blah, blah. It would sound really good. So it doesn't owe the market anything at this point. It could just hold that range. That's a pretty narrow range. It's pretty muted in the current market environment. We actually had market maker move on the ES yesterday, right? We had the MMM pop up. So with all of this angst and violence and volatility and this long list of economic events for the day, the idea that we could maintain inside this range, it's plausible. It's absolutely possible, but it's not the base case. I would expand the range just a little bit to include yesterday's high and yesterday's RTH low at least. And since the Globex low wasn't that much farther away, you might as well just go ahead and get that. And at that point, if you cover all of yesterday's price action, you realize one, we're inside day. Two, the entire range of yesterday really isn't all that big. And that we could break it down perhaps into two different ranges. Because like we talked about before, if the entire range is my focus, then it's a pretty wide quadrant. But if instead we can break that quadrant down into, say, different groups, then each one of those groups can be benchmarked with trade ideas, with its own pivots. So for zone one, it would be yesterday's high down to the RTH open of yesterday, which is pretty close to our own Globex low. And then the other zone would be from that same open down to yesterday's lowest point. Those two different quadrants would still give us an inside day, but it would allow us to break the range down significantly. You could add to that a pivot point at the Globex open of today, the Globex low of today, and the Globex high of today. That would give you additional pivot points to focus on. We get there. If then, now what, right? We have an ADR today of 2.58%. If we were to get bullish, now that we're done talking about the whole sideways thing, Well, what else can we do? We can stay bearish, we could stay bullish, we could stay sideways. With the sideways discussion out of the way, suppose we actually get positive economic news and we start to break out to the upside. What would that look like? Well, first we'd have to break through our own Globex high, challenge the ADR half at 3,900, and then a full-on ADR at 3,953. Now remember, 3,953 is not an exaggerated move. It would be a normal measured move. Nothing extreme about it at all. We wouldn't need to give a lot of consideration to price action this far back. It never hurts, of course, to say mark a pivot point there, maybe across the high of it or across the low of it, but drawing a line doesn't give us anything, right? You'd still want to take it over and look at, say, the 10-day, 30-minute, and kind of look to see if there's any volume. And as we can see, it's a real shallow area, so marking any of those bottom pivots wouldn't really do, a lot of justice. And actually, the center of all of that price action is where the greatest amount of volume was at. That is right around the cog line, 39.11. So that's perfect. It makes things easy. 3,900, just because it's a roundy, I would mark, and 39.11 because it's the cog line, and it also matches up with the significant resistance level. I will point out, as I always do, that when we're outside of the box, we have every expectation that we're going to go back into the box. And since we're at the top of the box, we have every expectation that we're going to go to the bottom of the box. When we're at the bottom, we expect to go to the top. Right? So we're outside the box. Base case argument at this point would be that we get back inside the box. If we don't, if we continue to expand farther away from the box, it's not that we can't do that. We just would want to recognize, hey, it's doing something it's not supposed to do. We go back to that when what should happen doesn't, right? WWSD. So with that in mind, the resistance at 39.11 would be the number one focus for me if we're looking at an upside move today. Make the continued argument for the downside, right? Because if we've talked about the range and we've talked about the upside breakout, we still need to be fair and talk about, well, what if we get a downside breakout? Say the news comes in today and it's economically sensitive, everybody gets upset about it, and we start making that break to the downside. We'd look to complete a new low within the Globex, so 38.32. Challenge the RTH of yesterday at 38.11, which is a cog line. I wouldn't even bother with the 38.07 pivot, and instead would start focusing on some of the Globex pivots from previous days. We got an ADR half at 38.04 and a full ADR at 37.54. That 37.54 doesn't line up perfectly, but it is along the lows of that Wednesday session, right? Tuesday session. Remember, there's not a lot that we want to deal with on Monday's price because we've been treating it as if it was still Globex, right? Otherwise, everything just becomes a muddled mess. So we wouldn't mark Monday's open. I wouldn't even mark Monday's RTH low. And there's an argument to be made to mark that Globex pivot point between, say, Monday and Tuesday. It would still be considered like all of Friday, right? If we consider we closed on Friday, opened on Tuesday, and we just count all of the things in the middle there as Globex, then that would be our Globex high of that time period. It's worth marking. Tuesday's RTH open has a pivot that we could mark as well. It's another valid institutional pivot point, right? And that'd be 37.75. It was interesting that we were all waiting on that news and waiting on that news and waiting on that news yesterday. And then when it finally came out, it was a dud. Now, the thing about that dud, it wasn't listed as one of the top 5 situations for the month, right? When we think about what's on the table for the month of July, the month of July, yesterday's FOMC minutes didn't even make the rank, right? Didn't even fit the bill. July 8, June jobs report. July 13, June CPI. July 15, second quarter earnings season kicks off. July 27, the new FOMC meeting. And July 28, the advanced estimate GDP for the second quarter. Those are the top ranked situational economic expectations for the month. And what wasn't on there? The minutes from yesterday. So I wasn't really too surprised to see that we, rock and rolled and shook around and ran right back to nothing, right? We just didn't get a whole lot out of it. But what we did get is that leg up, right? So to kind of see if we can keep it. Gold is still stabilizing up from that move that it took the other day. It's managing to maintain its VWAP, and it just hasn't crashed and burned. I guess that's a nice pat on the head for gold. We really want to see it continue to hold and slowly come up off of those lows without any extreme moves. Bitcoin, it didn't really participate in that rally yesterday like you would have expected it to, but later in the evening, it did get a nice little bump. We're still holding above VWAP, barely, and we're holding above yesterday's level, barely, but barely counts, right? Hand grenades and horseshoes, marriage maybe. The bonds, we had that nice little liquidation last night. Managed to take it back again. I had a little suspicion of a raid versus draw, right? You draw them in, draw them and draw them and draw them in, and then you raid the liquidity and then rip it. And that really, I mean, that's like a classic raid and rip right there. There was a lot of talk yesterday about oil. I did start to take it, and I ended up cutting. I didn't swing it just mainly because of the margin required to hold into the close. But I gave a call out on that red candle right there about the breakout. And we got the breakout, managed to get above VWAP, got too close to the end of the day, closed that thing down. But nice trade. Let's see if it sticks. If we get another opportunity today, I'd really like to get a nice run in this thing. Say, we need to get above 100 again. If we get above 100, let's see if we can start getting back into the 102, 104 ranges. And like I said, the margin is just too much. I'm not holding these into the close. So, get in, get a good 5 to 7 points, back out again. No reason to take up residence in that thing. There's a lot of demand destruction, and there's been a lot of talk about what's going on in the energy market. You have to realize if you're going to trade that thing, that it's not about looking at a higher time frame and doing technical analysis. There's so many extraneous bits of impact on that thing. Yesterday, for an example, the sanctions on Iran, or the president coming out and talking, and there's always somebody trying to put their finger on the scales when it comes to trading in the oil. So longer term swings, something like USO, or pick your ETF, pick your Chevron, Halliburton, take your pick. Trying to trade those is always going to be a little bit tricky because of the deliberate manipulation. You literally have government officials doing everything they can to move the price of oil. All right, the dollar is off of those highs, but we are not back down below 105, and 105 has been our benchmark. We need to see this thing get below that if we're going to see a rally in the S&P and the NASDAQ that actually sticks. Right? We can get these nice little bumper sticker pops, these midday squeakers, but they're not going to count. They're not going to cut it. If we want to see a nice bear market rally, a good 10 or 12 or even a 15% move in the S&P or the NASDAQ, got to get that dollar down. Bear market rallies of 8 to 10%, that's 100% doable, right? And still, there's more people calling for us to see 3,400 first before we would ever see, say, old highs. Or say it another way, that we're very likely to see a new low on the year long before we would ever revisit our old highs of the year. That's the prevailing sentiment out there. All right, I guess it's going to be that one. It'll do, I guess, for the day. Oh my goodness. That's a hard one to look at. I don't know what happened to my trend spider. It suddenly went all wonky on me, got out of weird colors. Let's see what we can do about it. Just take a second. All right, back to normal. Got some really nice trend line breakover setups, say like on ExxonMobil. It's not really as much today as it's going to be for tomorrow. But if we're looking for that reversal, especially in the energy, then names like ExxonMobil are looking pretty good. At the very least, linear regression would have us believe that we're going to see a pop back in the other direction just to get back towards the mean. Semiconductors have been constantly beat down consistently. It hasn't, there's no end in sight on that yet at all. That white line is the year-to-date VWAP, and as you can see, semiconductors are significantly below that level. Nice swings, consistent, persistent moves to the downside. We just put in a nice swing low, very likely to, get above 200, call it 205 before the next swing high. If you were to, for an example, snap a linear regression line from year to date to our current location, that swing low and swing high would be much more visible, much easier to identify. It didn't really give any kind of inside day or R2G or trend line break. Well, we got a little bit of a trend line break, but no R2G, no inside day breakout, no IX10. Emerging markets are up this morning over 1.25%. We use emerging markets for our global risk on, risk off sentiment. So seeing this bid up this morning kind of implies we're going to continue to see that risk on money this morning. The devil's metal, silver, also up more than 1%. I like the way that Tasty approaches it, right? It's not, they don't just look at, say, silver or gold. They just lump it all together and call them precious metals. The financials are going to be kicking off earnings season starting next week, right? I believe it's the 14th when the banks first start to kick off, and we have economic events on the agenda as well. So next week's is going to get sort of rowdy. The financials in the last 2 days has been a major boon to the market, right? It's just been this, it's like an albatross around the market's neck, just holding it back. So I would continue to focus on KRE and XLF for any sort of, if you think we're going to see a rally today, right? When you go back and think about what we talked about, looking at the S&P and the NASDAQ, you're going to see an upside move in the market. You're going to have to get those financials to at least flatten out and quit being so negative, right? They don't necessarily have to rally with us, but they certainly can't be continuing the move to the downside. If it continues to do things like that, we're not going to see that kind of rally that we're looking for. And a lot of really good names like AMD, which has a great beta and it normally moves around a lot. It's kind of been a bit muted in the last few days. We're just not seeing the moves that we would normally see. The volume's not there, the participation's not there, the moves aren't there. Don't quite know what to do with it, right? But if you look at the crypto list, AMD tops that list, because they put it all together in alphabetical order. It's one of the weights that are in the Smalls Exchange crypto product. So we're looking at the crypto names here. You can see most of them are up. There are a few that are down, but they're more of the very small weighted names. So Square, Nvidia, Riot, Coin. Another sector that doesn't get enough attention when you just look at the 11 names in the S&P sectors is the EV market. These are also looking really good this morning. We've got a potential red to green setup in XPEV. We are above the anchored VWAP, had a nice pullback. After that earnings, we had this like a really beautiful run, clear pullback, got above the 50. Another great expansion, pulled back, and we're resting on that VWAP. Is a little bit of a line in the sand here. We need to hold this VWAP. This is the year-to-date VWAP anchored. If it don't hold here, we're looking at, getting back to that 50 line, which would put us at about $25. So a nice red to green and a TRB today. Whether we're actually going to get the follow through today remains to be seen, right? But we want to see that red to green setup unfold, which for me usually lines up with, I like to see the market in the pre-market get above yesterday's open. because that becomes a support level after we open today, right? We tend to slide back a little bit. We want to catch on that, bounce, and then get our rally to the upside. So that would be inside day breakout, IX10 breakout, TRB breakover with an R2G setup. Still need to get the rally, right? We still need to get that follow through. You can see that we have the red to green setup. We got the rally in the pre-market. We're continuing to set higher highs and higher lows in the pre-market. And at the moment, we are above the open from yesterday. That's the benchmark that I was talking about. It's one of the key things that I like to see for one of my own red to green setups, because if we do see that slight down move at the open, which, it makes sense. That's what we would see when you're gapped up in the pre-market. What you expect to see the market do is attempt to close the gap. That gives us a Busby bounce and then a nice rip to the upside. So we're above that 31.59. I want to see it hold that as we get into the open. And then we've got a significant level of resistance at 32.20. We get above that and we're good to go up to 33. Right. So XPEV, it's a good name on the list. Just keep in mind, we're not looking for a lot of swings here. China is starting to talk about locking down districts again. So, JD, Alibaba, XPEV, any of those China names, approach with caution. If they lock down again, you're going to see all of those names take a significant beat down. But for a day trade, or maybe, an overnight swing, if you can lock in your gains from today and then sell an option against it to lock it in, take it as a swing for Friday or something like that. And then the pot stocks, kind of break those out and keep them separate from the rest of the market as well. A couple of names in there that are doing pretty good this morning, including one of their real estate names, XXII. It's a fun one to trade, reasonably decent liquidity. It is my day to stream in the futures, so I will see you all there.